Welcome to The Interest. I'm Katie Jensen. Today, we're joined by LaDonna Lockard in her new segment, Maximum Conversations in Minimal Time. After that, our own Vincent Valvo leads us in Poetic Moments in Mortgage. Then stay tuned for NMP's Mortgage Meteorology with Sarah Wolak. But first, we learn why San Antonio's top loan originator decided to hang up her LO hat and pass on her wisdom of life and loans onto others. Jennifer Guidry had a successful career in mortgage for 28 years and is now sharing lessons learned with others at coaching and speaking engagements.
I could have just coasted, but I chose to I gave everything up so that I can do this. And I'm taking just a leap of faith that people are going to want to hear what I'm saying.
Guidry was the LO who would work nonstop, becoming one of the highest producers in her area. Then she was diagnosed with cancer and realized just how important it was to focus on family and self-care.
Once I recuperated and while I was healing and from cancer, I was like, I can't do this anymore. It's not worth it to me. It's not worth, killing myself to produce these numbers. And so I figured out, how to do both.
Guidry has learned how to attain success by implementing strategies into her daily routine, such as setting proper expectations and time management. Now she wants to teach others in the industry who are pulling their hair out trying to reach the top how to find that balance.
You don't have to work 24/7. Like, you could still have an amazing career. You could still be number one. You can still do all these things, but come home to your family after work and enjoy vacation.
That being said, Guidry values work ethic and keeping at it every day. The author of 2 books, she recalled the best piece of advice she ever received about building a career as a loan originator.
It's a pipeline, not a faucet. You keep it open. You don't turn off and on a pipeline. You keep that thing open all the time. And so you're constantly building your pipeline, And what happens to a lot of people is they get really busy, then they turn off the faucet, and then they stop doing all those things. And then this is why, their production goes like this every month, right? It goes up and down and up and down and up and down. But if you consistently work on putting things into your pipeline, it will come. But you got to work on it every day. You can't turn it off and on.
To learn more about Jen Guidry, visit nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
For The Interest, I'm LaDonna Lockard. I'm here today with Joe Wilson. Joe, you are the CEO of Social Coach. Tell me a little more about Social Coach and what exactly it is that you do there.
Yeah, thanks, LaDonna. Great to be here. Basically, what we do is we're an enterprise social media management software that helps mortgage companies, banks, credit unions, brokerages, et cetera, manage the automation of posting, creation of content, and also tracking of compliance for all that social media content that goes out there.
That is such a unique field. How did you decide that you wanted to go into this? Because you're a co-founder, correct?
Yeah. So basically, I've been in the mortgage industry for the last 20 years and on the technology side for the last 15. So I was a loan officer first, then got to the technology side, and been blessed with them, been a part of a lot of different companies that service large swaths of the mortgage industry. And about 5 years ago, started finding that people didn't have an answer for social media. It was a Wild West, and it still kind of is today. So what we're trying to do is help loan officers, help marketing teams, help compliance teams come together to really manage this whole question of how do we do social media well and compliantly. And that was just something that just didn't exist. And so what we did is just start asking a bunch of questions to marketing teammates. We found that they needed help to scale their efforts. We asked a bunch of loan officers and sales managers, what do they need from social media? They just need help with ideas, with content generation and automation of posting. And then compliance, man, they just need a lot of help because it's tough to be able to see what's going on out there, have some visibility and some controls. And that's really what we did.
Absolutely. You are so right. And what a dream come true for the enterprise accounts that you work with. Because, I mean, let's be real. You're right. It is still the wild, wild west when putting things out there. What do you think are kind of the most common areas that people think they're okay, but in reality, they're sending off the red flags there at Social Coach?
Yeah, I mean, I think it changes all the time, right? Just like as quickly as the algorithms change or trends change on social media, the concerns out there are always changing as well. And today, short form video content dominates all types of social media. So what we're finding is most loan officers want to follow this trend because short form video content gets 1,200 times better engagement. And that's how you're going to actually be seen and get loans from social media. And so the big problem that we're finding that companies are having is that there's really a tough way to track what's actually being said, not necessarily being typed. And so what we've done is we've been able to use AI and transcribe videos as they go out and what's being said by loan officers to be able to make sure that not only is the caption appropriate from a standpoint of compliance, you could list off all the regulations that are out there, I'm sure, the back of your hand, but make sure that those are all compliant according to their state, federal regulators, but also what's being spoken. And so that's really the biggest thing that we're seeing right now, where some of the regulators, particularly at the federal level, are really looking at, and not a lot of people outside of Social Coach users have an answer.
Going forward, do you think social media is going to continue to play such a part in how LOs are getting their leads? What do you kind of see for that going forward?
Yeah, I think myself as a loan officer 15 years ago, what I did to try to get business, and if I try to do that today, which was going visiting realtors' offices, that wouldn't even exist. Right? They don't even work out of offices anymore. Some do, but this is the way that most people are getting visible and getting loans. A lot of our clients are now reporting that over 40% of their business is coming straight from social media. Think about that, 40% of your business from leads that you get directly from social media. And I think that number is only going to grow. I saw a recent stat from the National Association of Realtors that said that 90% of realtors are on Instagram and that their highest quality of leads, right? They rank all the different quality of leads from their CRM, mailers, door-to-door knocking, whatever the case may be, but the highest quality of leads came from social media. Unfortunately, we don't have any really good data points or studies that have been done on the mortgage side, but the closest related data that I have, that's where high quality leads are happening. Because if you think about it, consumer behavior is I want to be able to see and understand who I'm working with before I even pick up the phone or DM them.
Joe, I think we're going to have to do a part 2 of this because we have just scratched the surface. Where can people find you? How can they get a hold of you? What are your socials? Because I love what you're putting out there. And I think it is such a great way that people can see how to do it compliantly and just what you have to offer.
Yeah, well, you can certainly email me, joe@socialcoach.io. You can find us on Instagram. It's probably our best platform. That's where most loan officers and real estate agents are hanging out. So you can look up our Instagram account, socialcoach.io on there. Or you follow me personally on Instagram as well, joe.wilson83. We'd love to connect with you on a more personal level as well.
Well, thank you so much for being here again today. And you know what? We're going to do this again because we have a lot more to discuss. For the interest, I'm LaDonna Lockard.
In the land of loans where dreams take root and homes become our financial pursuit, there dwells a breed of savvy, diligent folks, mortgage originators, the kings and queens of notes. But hark, what task awaits this noble crew? NMLS Continuing Education, a chore so true. Yet fear not, dear lenders, for I bring cheer in the form of a poem to make it all clear. Gather round, ye mortgage mavens bold. Let wit and wisdom your woes unfold. For though the coursework may seem a bore, in its depths lies knowledge to open doors. So grab your pens and laptops with glee and delve into the world of CE. From regulations to market trends galore, you'll emerge with expertise to soar. For in this ever-changing financial sphere, continuous learning is the pioneer. So embrace the challenge, let curiosity lead, and watch your career blossom and succeed. So here's to you, mortgage originators fine. May your NMLS CE be a glass of wine. Toast to growth, to knowledge, to the quest. And may your loans be ever blessed.
Welcome back to this week's Mortgage Meteorology. We'll touch on all things to do with the overall climate of the housing market, not just in our neighborhood, but yours too. It's that fun time of the year we get to lug out our air conditioners and crank them up. And of course, the housing market is no different. Prices are heating up and reaching record peaks, so slather on the SPF 100 and brace yourselves for this home price heat wave. Redfin reported the median U.S. home sale price shot up to a toasty $387,600 during the 4 weeks ending May 19th, marking a stifling 4% increase from a year earlier. The top 3 metros where the median sales price warmed up the most were Anaheim, California, Detroit, Michigan, and San Jose, California. But Redfin says there's a seesaw effect happening. While median home prices saw sweltering weather patterns, this led pending home sales to cool down 4.2% year over year, the biggest decline in 3 months. Prices continue to soar even as sales take a dip, all due to a scarcity of homes in the market. While new listings have surged by 8.5% compared to last year, overall inventory is still sluggish. So expect this trend to keep the market hot and competitive. Even though new listings decreased in 6 of the metro areas evaluated by Redfin, several hotspots saw listings start to moderate. Places like San Jose, California, Montgomery County, Pennsylvania, and Phoenix, Arizona saw the biggest year-over-year increases. That's all for this week's Mortgage Meteorology. Stay cool out there. I'll meet you back here next week with your updated housing market barometer.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.